Analysts who are watching us on the website, you can send in your questions through the online platform. We can see the questions here and we'll answer them as appropriate. First question from the floor. Yes, Eva.
Thank you for the presentation, management. I have a few questions. First is on the acquisitions. I don't know whether you have shared this data in a previous presentation regarding your acquisition in China. What's the yield on investments in terms of after all the tax and repatriations? And also, taking this as an example, how do you look at Link in terms of future investments in China? I mean, in terms of the expecting yield on cost or yield on investments. My second question is on the data that you talk about, that 60% of your tenants are non-discretionary. Is this on GFA or is it on rental income contributions? Thank you.
For the second question, the answer is very similar, around those numbers in ballpark. First question.
Is the target yield on China. Investment, we invest in properties for the long term. So, of course, we need to consider the yield, the entry yield of the assets when we evaluate the opportunities. But I think it's more important to look at the long-term sustainable growth of the income of those properties. We repeatedly say, it's not one number that drives the decision. Of course, we need to make reference to the entry yield, but it's more importantly the long-term growth potential. On the tax side, because of the way the rules in China work, the accounting rules, it depends on the depreciation charges and other charges that would affect the after-tax profit. So when you look at the numbers, you need to start at the growth side, before tax, look at the growth potential of the assets. And to the extent, there are depreciation charges, the cash is what they call the cash trap. It's still there. It's in the company. It's just a matter, you can't actually distribute it out offshore back into Hong Kong in the short term.
For EC Mall, it is a little bit harder to answer your question because effectively we only have acquired it on the 1st of April. We'll try to share more information with you when we announce our interim results. But if you go to look at Lions Rise Mall, we acquired it in September. Within the few months since we acquired it, the rental income has already increased 16%. So when we announced the deal, the initial yield was below 3%. And with the increase, and then we're expecting that the occupancy will continue to go up. You have the number at the end of March, has gone from 84 to 90% occupancy. Since then, we have filled further space. So you can see how we're looking at it, not in the point of acquisition, but what is the potential, what we can do over a period of time. And obviously, apart from initial yield, we also look at IRR and other measures. So we'll try to share more information with you in the future about Beijing.
Next question. Yes, Jonas.
Okay. Hi. Yeah. I have two questions. One is that the PowerPoint highlight as a property redevelopment will be one of the growth strategy. I wonder whether there's more color can be given on this. And second, for the 56 million increase in staff cost during the year, I wonder how much is due to the accrual charges for the long-term incentive plan.
By virtue of the approval we received in January, then we can do development and redevelopment. So that's really the point. For a lot of these initiatives, for example, we have the approval to do office investment, not development, but investment in office, several years ago. And we have looked at different opportunities, but we haven't done anything until we actually combine both development and office investment into one project, which is the investment in the Kowloon East project. So for some of these, we're highlighting that these are the possibilities that management will look at. You would appreciate that for property redevelopment, it requires negotiation with multiple stakeholders, so it will take time. But suffice to say, at this stage, it's something that we are looking at. It's just going to take a long time. So I wouldn't put a mark on which year that you should put on your forecast. I think it's going to take a little bit of time. But the reason for putting it there is since January, this is possible. But before January, this is something that could be done, especially with our partner, co-owner of the estate, but we can't do it. So I think this released something new for us to consider more seriously than before. So that's the main point of highlighting it. On LTI?
LTI, probably the 56 you're referring to, then it will be probably around 35 to 40 million, somewhere around that range.
Yes, Ken?
Yes, questions on your office development. So first of all, can you tell me, when I do a subtraction, is that the construction CAPEX is around 4.5 billion? So how do we expect on the CAPEX schedule till 2020? This is the first question. And for the second question is also on the office size. How do you see, because previously in January you mentioned that the plan is still quite premature for the overall plan of the office and retail mix, all this. Can you talk a little bit more whether the plan is fixed with Nam Fung and basically elaborate more a bit on the ratio of the office and retail?
We have almost finalized the plan between the two of us. And then we need to make submissions to all the different government departments to get approval. So even up to today, we don't, we have our sort of dream plan, but until we get all the government approval, I'll be reluctant to share more. Suffice to say that in this particular area, I think we'll probably have more, it's really an office building with supporting retail rather than a large shopping center. Your first question about office development.
CAPEX.
It will be spent obviously over a period of time. The largest spending is early in the beginning, the premium that we pay to the government, which we have, and then the foundation work, and then really stage payment for the construction, which is towards the later part. All this is obviously not affecting the P&L because these will be capitalized, and then including then interest and other costs as well. I hope, as we discussed at the board meeting this morning, by the time we come to the market again in November to announce interim result, hopefully we'll have the drawings and you can see the buildings, how it looks like, and start to imagine or what sort of tenants will go in. But it will take us a little bit longer.
Okay, next question.
Got two questions. First one is about the property redevelopment opportunity. Although it's still in early stage, could you share with us, say, the criteria for redevelopment? Is that a ROI target like the AEI initiative? And then second question is about the valuation, the cap rate compression. Understand it's the valuer valuation, but could you share with us, say, the valuer's view on the trend? Will that be further compression going forward? Thank you.
For redevelopment, it is really more conceptual. I don't think it is the right time to put too much emphasis on it right now. And it really requires negotiating with many stakeholders. In a rather interesting political time. It's the best way to describe it. So let's not put too much emphasis on it. Again, I just want to emphasize it is now possible. Before January, we can't even do it. So we can more seriously look into it. I think that's as far as we should say about this at this stage. Cap rate?
In terms of valuation, I think the adjustment is more on the medium-sized properties in our portfolio. If you look at the cap rate range that we disclose every year, basically what the valuer did is to move up the bottom end of that range. So in terms of retail properties, we used to have properties that are being valued at 6+% cap rate, and the bottom end of that range now is 5+. For car parks, it used to have close to 7%, and it's now move up to around 6%. So it's more to do to reflect the market demand for these medium to small size properties, and also as supported by the price we achieve in the disposal process. So the valuer now, they have more data points, and looking at the market demand still very strong for small to medium-sized properties, they're more confident in pushing up the cap rates or compressing the cap rates for the medium-sized properties, thereby resulting to the increase in the portfolio valuation.
Well, you are all the expert in valuation. I know a lot of you look at yield over the unit price. Some of you will look at asset value. For car parks, even after this adjustment, the average valuation per car park space is 330,000 Hong Kong dollars. I guess it's we are moving it closer towards market price, but I think we still have some comfortable buffer for the retail properties. Hubert already addressed that point. And I think one of the concern that some of the investors and analysts have in the past is whether the valuer was being too conservative. I understand, but I understand that at the current environment, when people think about interest rate increase, cap rate, potential movement, and all that, it's just the right time. But I think it is something that the valuer has to look at. What was right for March. And we'll need to make our own judgment call about the future. But there's a fair bit of catch up that they need to do. Also, there were transactions in the market that allows them to benchmark much better than before. I mentioned it in Chinese before that 估值 has always been 即係估估下即係估翻嚟嘅。The guess is total guesswork. And now, hopefully, with the transactions that we have done and what have happened in the market, allow them to have a slightly more accurate estimate than before. So that's why they have made that adjustment this time out.
Probably the last questions. We're running a bit out of time. Kai Chen.
It's Kai from Macquarie. Just two questions. First one is, at the moment, for the new strategy, i.e. the asset disposal or the core one, the asset acquisitions in China, how many assets are you looking at the moment? For potential divestment in Hong Kong, and also how many projects are you looking at in China, and if you can share at what locations, that would be good. Secondly, I feel like there is a less emphasis on the margin this time in the presentation. Could you share with us your margin outlook for the next 12 months? There was huge emphasis on cost control in the previous presentations. Just want to hear the update on that. Thank you.
Yeah. Okay. While Andy look out for the number, I think we still have it in the pack. Just we move it maybe to the back. Disposal. We are evaluating constantly the portfolio. We haven't made any decision about how many and what to sell at this particular stage, but we will continue to review that. And the criteria from what we have mentioned, how we dispose of the 9 will probably be used consistently. Non-core in terms of growth, probably not as strong as some of the other assets that we have, etc. For acquisitions, again, tier 1 cities, mid-market, retail, offices in strong locations. Initially, will be asset that has income is already income producing, or at least property that will be completed soon, so that will be income producing very soon. We had the team work very hard. They looked at 94 different properties before we bought one. So I don't want to put too much pressure on the team. They're working very hard. They are in those 4 cities that I mentioned, plus Hong Kong, and we don't have a big team. So when we're ready, we'll talk about it. Yeah. Margin up. So on 30,
page 34 in your booklet. Yeah. If you look at detailed breakdowns, basically most of the expense item has been pretty much under control. Most of the increase is about less than 2%. The one main increase is the staff cost, which Jonas has mentioned. As asked about, is about the LTI accrual. I think do expect similar trend for the next 12 months. One of the pressure going forward will be the minimum wage impact on the top line on the property managers' fees. I think what we are going to mitigate that increase will be we have been looking at the process control within the each property centers. Hopefully, we can be more efficient in terms of the works that we do on the ground. Hopefully, that can eliminate some of the price increase in the minimum wage. If you look back in the past 2 years, the NPI margin has been improving about 60 bips to 80 bips per annum. So we are expecting similar trend for at least the next 12 months.
Okay, thank you for attending this presentation. If you have any follow-up questions, I'm sure you know how to contact us. And if you believe, on the IR front we're doing a good job, please support us in the various surveys. Thank you.